Hello there, this is James, and you are watching tixeeLive. And a very good morning to you. In today's program, we are going to do a bit of a recap about what happened last night from the FOMC minutes. And we're going to look at the aftermath and the impact it has done on the market, plus a couple other things to keep an eye out, and certainly talk about what's happening later in the US, so just before the US session. But before we get into that, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, be aware of the risks at hand for entering any trade. With that out of the way, let's get started. So, as we were talking yesterday in yesterday's US session program, there was a big anticipation for the FOMC minutes. And it didn't really disappoint, but it didn't really move, didn't sort of shock the market that much, but we still had a bit of an impact. But let's recap what the minutes actually said. First of all, all 12 members voted for the 50 basis point rate hike, okay, which happened 3 weeks ago. All of them voted for that. And don't forget, that's the highest increase the Fed have done on interest rates since the year 2000. Okay, so all members voted for it. As well as that, there were chats with some members that the China lockdowns, because don't forget, China has a zero tolerance COVID lockdown attitude, which has affected, obviously, a lot of things. So China lockdowns and the Ukraine crisis has increased risks, not just for the US, but globally. And more importantly, what the market was really looking out for was the fact that they said in these minutes that a 50 basic point increase is likely to be agreed in the next 2 meetings. And that means June, July, we're likely to see 2 more interest rate increases by 50 basis points. They also said that the labor market was pretty stable, but they did say that there was heavily concerned about inflation. So yeah, they're looking at doing 50 basic points in June and July increases on the interest rates. So what was the market's reaction? How did the market react? Well, a little bit of both. First of all, a little bit of optimism. Okay, because there was fears because of certainly what Powell said a couple of weeks ago in his speech with the Wall Street Journal event. Remember, I told you a little bit about that. He was really aggressive in that speech. Even though, like I say, I call him the inflation terminator. He was very aggressive in that speech, and the market reacted with fear that he was going to increase it by more, like 0.75 or maybe a whole basis point. The reaction to the market then, on the back of that, was fear, and we saw big drop-offs in the market. The reason why is because we all know we have high inflation. Inflation in the US at the moment is 8.3%. So we know we have high inflation, and the best way of fighting inflation is increasing interest rates. But the fear is if we do that too quickly, too aggressively, bear in mind we have supply issues, and economically we are a bit, I'm talking about the US, but globally, we are under pressure economically. By increasing interest rates, it makes it more difficult to borrow. So that means companies are going to struggle, as well as us good people, to borrow money. So that was the fear. By them saying only 50, the market thought, okay, we could possibly handle that. The economy can handle that sort of rate increase. So so a bit mixed. So let's have a quick look at what's actually happened on those instruments we were looking at. Let's start off with the euro. Now, remember, yesterday we were talking about this potential trend line, okay, where it was trading just around. And during the session, up until obviously the minutes, the trend line was sort of holding off. But it had that real big trouble, that big selling pressure from that resistance level we were looking at, 1.07017. It's currently under the trend line now, and that trend line now acts as a potential, or could be a potential resistance. Again, so I'm watching that. We are seeing buying again around 1.06616. So that again is another area of interest. So that's what happened to euro. So a little bit of strength off the back of the minutes, really following the trend line. I think really back on Lagarde's speech a couple of days ago. But now we're seeing a little bit of dollar strength on it, and it's not sort of like, obviously we're only an hour into the session anyway. So so those are the two areas of interest to watch. We're still above the 100 moving average. We're still above the 200 moving average. So in general, it's sort of it's sort of ranging now between 107017 and 106616. It'd be interesting to see how this reacts later with that big news coming up. Again, I'll talk to you about that a little bit later. The cable. Oh, the cable. The cable got boosted by it. Okay. Remember we were watching that key level, 125.49. Well, it's now managed to break it during that session. It has had selling pressure since then. This is on a 30-minute chart. And now, interestingly enough, I'm keeping an eye on that level, that 125.49, because that could be a potential area of interest for a support. Because you know the theory, if you have a resistance level which is broken, you get confirmation if that resistance level then becomes a support. So that is going to be an area of interest. The cable benefited yesterday from the minutes. And as you can see, it's above the 50, 100, and the 200 moving average. Gold is still trying to test that key level of 1865. And it's under pressure slightly. It's under the 100-day moving average now. Currently trading at $1,847. So yeah, now is a little bit ranging as we begin the session. But yeah, it didn't really get a boost as much as we hoped on the back of the minutes. Right, what else? Let's have a quick look at how the plus S&P 500 did. There we go. Okay, again, slightly buoyant on the back of the minutes. Not dramatically buoyant, it wasn't like, wow, check it out, you know what I mean? But it had a slight boost, and it's currently trading now at pre-market, obviously, 3,991 and 23 points. Sorry. So again, we're above now the 200 and the 100 moving average. So it got a slightly slight boost from those minutes. So yeah, as you can see, the market again didn't come alight. Like it wasn't the greatest of moves, but it did get a little bit of a boost. And I think it's more of a cautious boost, to be honest. I think it's still very, very cautious. Be interesting to see how the rest of the European session goes today, because like I say, we're only an hour and 8 minutes into the European session. And yeah, so it's, a bit of a boost, but not like an amazing boost. I'll call it a caution, a boost which is very cautious. That's it. Boost, which is very cautious. There you go. That's what we're calling it. Right. What else is happening? Okay. Tech is going to be under the microscope because Nvidia, who makes chips, computer chips, they have said that due to the China issue, the lockdowns in China, there's going to be a shortage of video game chips. Okay. So it's going to be interesting to see how they open. Obviously, how that opens in the US session, but it also be interesting to see how the NASDAQ reacts, because don't forget, NASDAQ is under a lot of pressure, and tech companies in general have been feeling the strain pretty much from the beginning of the year. So it'll be interesting how this news, they announced that after the market had closed. Be interesting to see how they open, and at the same time how the NASDAQ reacts to this information. European market, how it's open so far. Well, again, slight, not amazing, but a slight boost here. You have Euro stocks at 0.62%, FTSE 100 0.28%, and the DAX currently at 0.61% up. So they're all up, but again, not dramatically. So yeah, that's how Europe is opened at the moment. Of course, later, don't forget, we have the big one. Well, hopefully it's going to be big. Often when I boost these events up, they tend to be quite flat. So hopefully this one will be potentially a big mover. And that's the US gross domestic product. Now, that is expected to come at minus 1.3%. Last time it was minus 1.4%. So expectation is minus 1.3%. Be interesting to see how the market reacts. I will be doing a watch along. So do please come and join me and watch it with me. Hopefully it'll be quite exciting. We can watch color instruments and see where, where the potential areas of interest are. So yeah, that's at 3:30 my time, which I believe will be 12:30 UTC. So I'll probably go online about 10 minutes before so we can have a little chat about it. Don't forget, if you have any questions, please feel free to ask me while I'm online. I'm here to answer questions, and I like to engage a little bit of conversation, interact with a bit of conversation if you have anything you want to ask. There is no questions at the moment, but that's fine. So anyway, don't forget, join me for the watch along, the US GDP, gross domestic product. And don't forget, I'll also be online again, 4 p.m., which will be 1 p.m. UTC to do the US trading session outlook as well. So plenty to go on, plenty of excitement. So please come and join me and keep me company. On that note, do remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till later this afternoon, every single one of you, trade safe.